You're now tuned in to the Desire to Trade podcast, a show where we bring you the best figures of the trading world and teach you how you can become a successful trader. This is your host, Etienne Crete.
Hey, what's up, trader? It's Etienne Crete from the Desire to Trade, and welcome to episode 50 of the Desire to Trade podcast. This is the episode where I interview Rob Colville. Rob is a higher time frame trader, meaning he's trading Forex on really high time frame. We're talking about the daily chart and the weekly chart. This is especially great if you're having a day job, but in the case of Rob, he's using it to have a good lifestyle, to live the way he wants, and to have only to trade a few hours per day, and even less than that. So Rob shares about how he does it in this interview, and he also shares about a few common things that he thinks traders should consider. This is really valuable. So we'll go in the interview, and I'll get back at the end with takeaways. So, what's up, trader? It's Etienne from the Desire to Trade. Today I'm with Robert Colville. How are you doing, Robert?
I'm very well, thank you, Etienne. Thank you very much for inviting me on.
Yeah, it's awesome. So I want to start with the first thing. I really love the title of your blog. Tell us what it is exactly.
TheLazyTrader.com?
Yeah, also that's awesome for a blog. I love it. So we'll start by asking you what is one quote that inspires you.
Well, I'd say the quote that inspires me the most is ironically a quote that hasn't actually come from a trader per se. It's from Benjamin Franklin. And he says, if you fail to plan, you plan to fail. And I think that's not just true of trading, but in so many aspects of life. And certainly through planning and having an idea as to what your strategy is in trading, you really can do very well from it. Mm-hmm.
Tell us what's going on these days a little bit.
Sure. Well, everyone in this side of the pond is excited about Brexit, the referendum in the United Kingdom as to whether we should continue our membership or to leave. And we have seen a lot of volatility in the market. We've had some fantastic trades as a result of the declining pound, which has bombed against the euro. And we've been doing very well. Some of our clients have made up to 70% gain on their trading accounts. And this has been a result of the people who've been exiting the EU, getting louder voices in this hotly contested fight. And we've been basically taking advantage of the volatility, not just in the the pound crosses, but also selling the FTSE as well. And this is not just a testament to trading the daily and the weekly time frame and just selling your orders up and walking away and doing very well from it. It's a testament just to simply letting news and big news events just being a catalyst to letting your trades either go very heavily in your direction or quickly against you.
Mm-hmm. Yeah, that's true. Totally true. Before we jump into how you're trading and your style, I want you to tell us a story, which is how did you start to trade exactly?
Okay, well, are you ready for this?
Yeah, sure.
I accidentally, my journey in trading started by accident. I moved to London having obtained a first-class degree honours, and I started life in the city as a journalist. And I freelanced for a number of publications like The Guardian, did a bit of work for The Telegraph and The Big Issue. And I really enjoyed my work, but it just did not pay the bills. And while I was watching many of my peers who had got into white collar professions like law, banking, accountancy, you name it, they were earning a lot more than me, and they sure as hell were having a lot more fun than I was. And I thought to myself, well, what if there's a way where I can make a good amount of money and really just engineer my life to how I want it to be. And in fact, financial markets trading actually fulfilled that pretty well. So I gave it a go. I went to a 2-hour preview. I signed up to the course at the end, and I did the course eventually, and I sucked at it. In fact, I was so terrible at trading that I managed to blow up account after account after account. I was very arrogant with the market, despite doing very well in my grades at school and degree and everything like that, and being published by a myriad of publications. I unfortunately imported that ego into trading, and obviously financial markets don't really care about you or how good you are or how clever you are. They'll just do their own thing. So I had to eat a very hefty dose of humble pie. After about 2 years of struggling, I realized that, hey, I'm way too far into this now to give up. And I stuck at it and really kind of like developed a style which enabled me to trade the higher time frames where I could essentially have less time spent in front of the screen and less emotional rigmarole attached to my trades and get potentially more return from doing less. And that for me was the sweet spot. And I managed to gain a decent track record since about 2008, 2009 and then onwards. And the rest is history, really. I've really just become an expert, so to say, in end-of-day trading. It's pretty boring, I must confess. And it's extremely boring. But trading doesn't have to be exciting or interesting. And as I've got all this free time as a result of trading from little more than like 10 to 30 minutes a day, as you mentioned, I've got my blog and I do other things like help out with the Prince's Trust, which basically mentors disadvantaged people build their businesses from scratch in London. And other things as well, including health and fitness, which I'm quite big on at the moment. So that's the story. I'm no natural born trader. The only difference between me and a lot of people who eventually get chewed up and spat out by the market is that I stuck in it and I persevered, and I'm a very patient person and I've forced myself to become disciplined. That's the only difference. I'm nothing special, quite frankly.
And how exactly did you learn? Was it through books or through experiments or just trying by yourself?
I will be blunt with you here. I haven't got patience for books. But what I did do was I followed a couple of people who are already doing quite well in the markets, like Raggy Horner, for example, Mark Douglas as well, with Trading in the Zone. It was a very inspirational read. And I basically had a very set idea as to what my strategy was and refined it. And through reading, every strategy in the market works. Some strategies work most of the time, some of the time, but no strategy works all the time. But the key stumbling block I had was essentially mastering psychology. And this is where Trading in the Zone came into its own. And I thoroughly recommend that read to anyone who hasn't come across that. It's a very underrated element of trading.
Yeah, I think this book made a huge difference for me as well. So yeah, highly recommend it for sure. What is today your main trading style?
Swing trading. I trade on the daily and the weekly time frame. So I will trade both reversals and trading with a trend as well. So I cover those kind of angles of the market. Basically, my style of trading is universal. It can be applied, my specialist is Forex, but it can be applied to stocks, whether it's the NASDAQ, the FTSE stocks, Nikkei, CAC, you name it, or precious metals, commodities. It's universal across the board. But I just stick to currencies because there's only so much you can do in one day, right?
Mm-hmm, mm-hmm. That's true.
So basically, set and forget is the mainstay of my trading. I'm not really, and I'll be brutally honest with you here, Etienne, financial markets trading doesn't really, I'm not really that intellectually fascinated by it. I simply use it as a vehicle to get what I want and I move on, as brash as that might sound.
Yeah, but it makes sense though. That's, I think, what most people want. Most people are not looking necessarily to trade all day.
Yeah, it's true. And that's the worst thing you can do, especially if you're new.
Is that basically the main idea behind the lazy trader? Being able to trade only a few hours per day?
Yeah, or even less, between 10 minutes to half an hour. That's the main thing, because at the end of the day, a lot of people, they have full-time jobs and careers. And, this is a misconception that people have, certainly when they're new to financial markets trading, is that they're going to give up their day job and become a full-time trader, trading their tiny, itty-bitty trading account of $1,000. If you think about it, Warren Buffett makes 20% return consistently a year, and he's one of the best investors this planet has seen over the course of the past few decades. Now, what gives someone the right to basically make as much as he does in terms of return trading $1,000 trading account? Well, everyone has the right to make money on their trading account. What I'm simply saying is 20% a year is a very good return on your trading account, and it's certainly achievable. But if your account is tiny and you're making 20% on $1,000, you're making $200 for the year. And this is why I find it absolutely ludicrous how people can say that they're going to make a full-time living trading, giving up their day job on their tiny little trading account. And lots of people fall into that mistake. So what I always say to people, then, if you're busy with family, friends, you have a life as well, of course, your career, then the sweet spot is choosing a style of trading which isn't necessarily any less profitable than intraday trading. In fact, that's been proven it's not, which can free up as much time as possible for you to actually do the more exciting things in life and the more fulfilling things in life, rather than just staring at a bunch of moving lines on the chart. So this is why end of day trading made a lot of sense to me logically. And there is this misconception that end of day trading is far less profitable than intraday trading, when that is absolute nonsense. The reason why people think that intraday trading is more profitable is because they're in front of the screen and they are subconsciously attributing time spent doing something with money, when in trading that link is completely smashed.
Yeah, that's right. And in fact, I've been doing this end of day trading probably for the past 3 years. Although now I'm trying to go a little bit in smaller time frame to just understand how it works. But I can say it's really a good way to do trading if you want to trade on higher time frame.
Yeah, absolutely.
Because you don't have to be there all the time.
Yeah, I mean, it is, for me, it's a sweet spot. It's you can get the best the market can potentially give you, and you've got time freed up so you can just have a life basically. And that's really it for me in terms of end of day trading. It just covers up those bases, and I'm one of those people who, a full-time career doing something scares the head out of me. So I thought trading and having an online business and a couple of other income streams would be the sweet spot, because the worst thing you can do is put pressure on yourself to obtain an outcome from the market, because the market might not give that to you. The market is an ass. It will do its thing regardless of who you are, how desperate or how deserving you are. It will just do its thing, whether it's in your favor or not.
Yeah, it's interesting. Now, since you brought up the topic of tiny trading account, I'm going to ask you, what do you think is a reasonable account size for someone who want to trade full time?
Okay, well, I'll always say this to someone. Don't trade with money that you can't afford to lose. It's very, very important. Start small. The problem is with small accounts is people tend to take bigger risks because they want to make money fast. What I would say to these kind of people is just simply, it's all about percentage gain. Okay, if you can make 20% gain on $1,000, as you can on, say, $1 million in your trading account, that's as good as each other, really. Because if you do if you're underfunded or undercapitalized, and you are making consistent gains, no matter how kind of small your trading account is, if you've got a good track record, big money will find you. Okay, whether you decide to have a following by social trading, whether you decide to make yourself known to investment banks, hedge funds, institutions, if you've got a good track record, they will take you on, because they're all too aware of how difficult it is to make money in the markets, certainly for the retail trader. So I would say, if you're starting small, it's all about results, not monetary gain, all about percentage return.
I think even result, like, would it be a good idea for people to set a kind of goal in terms of result they want, or?
Yeah, I mean, I think it's very dangerous to set a monthly target, because that subconsciously puts you under pressure to find trades which might not be there. And you might be thinking, I speak to people who have ridiculous monthly targets. Like one guy I was speaking to the other day said, yeah, he wants to make $20,000 off £100, off $100. I'm just thinking, dude, it's not going to happen. Sorry. But I'll say reasonably, I mean, I always aim for about 2% a month. I know it doesn't sound like much, but when you look at the gain for the year, when you're looking, I have a benchmark of 2%, should I say, not a target. So, 25% for the year, I'll be very happy. Even if it's 10% for the year, I'll be very happy. Remember, for a trader, their first goal should be to break even. Their second after that is to make money.
Even to reduce the amount of money that they lose in the beginning.
Absolutely, yes. I mean, I speak to people who might feel a bit disheartened because they might have placed 5 trades for the month or 10 trades for the month and they've had the break-even outcome. But actually, I give them a pat on the back and say, well done. At least you didn't lose money. You've gone through the rigmarole and the emotional frustration of, feeling like, you could be making money and you don't. But you've gone through it, and that prepares you for the next month and for the month after that. It's all part of the process.
Mm-hmm. I think one of the advantages you have is your lifestyle. So tell us what a day in the life of the lazy trader looks like exactly.
Okay, now you're asking. Well, it's quite straightforward, really. I mean, in terms of my typical routine, I have on a day-to-day basis, I will simply scan the markets first thing in the morning. I'll go hit up the gym, go for a swim, see some friends in the afternoon for a coffee, do some businessy bits early afternoon, maybe do a bit of salsa dancing in the afternoon, or if I'm single, I go on a date or something. And yeah, it's all very leisurely, all very socially focused, and I always like to have a few businessy bits in the offing as well. And then when it comes to the evening, I scan the markets and I see if there are any opportunities. If there are, great. If there aren't, fantastic, because if there aren't any opportunities, I'm happy enough that at least I'm preserving my capital, which goes back to the number one aim for any trader: preserve capital. Second, make money.
Yeah, that's right. It's all about the capital. Yeah, for sure. And at what time exactly do you check the chart? Is it just in the evening sometimes, or do you have a precise time when the candle closes, for example?
Go with the New York close. I mean, it doesn't really matter. I mean, a lot of the currencies I trade. I mean, the European session is typically where most of the volatility is. And if I'm unavailable between, say, 10 p.m. Greenwich Mean Time, London time, and for the evening, then I will check the trades in the morning, because generally before 7 a.m., there's a decent window overnight where you can scan the markets. The markets won't really be moving without you. So you can generally catch big swings before they happen if you're trading the daily chart or the weekly.
Yeah, so that's quite late for you, though, like 10 p.m. to check the charts.
Yeah, exactly. I mean, if I'm out and about doing something slightly more exciting, then I will simply just roll it over until the morning. But typically, with my weekly market analysis, I have the heads up or watch list as to what I should be looking closely at. Say if I want to keep it quick and easy, then I'll simply just look at the currencies on my watch list. And like you've probably got a good insight into, Etienne, I don't trade very often, but when I do, they're trades of high profit potential. And we've had quite a busy and successful trading year so far, but like with variance, buses all turning up at the same time or not at all if you live in a city, we haven't had many opportunities over the past few weeks. And certainly people who are my clients who might be listening to this will agree that there hasn't really been much in the market apart from a euro short on the weekly and a FTSE short on the weekly. And that's it, really, for now.
I know a lot of people listening to the podcast and just thinking about trading in general are all about trading strategies, right? Like they want to have the perfect strategy. So tell us a little bit what you're looking for. Is it only price action, or are you a fan of indicators?
No, I'm not really a fan of indicators. I use reversal divergences as a confirmation to getting into, say, a reversal trade. I'm a great fan of reversal trades. I know they have a much higher failure rate than trend trading, but they really, when they work, they really, really work very well indeed. But no, I'm not really a fan of indicators. Price action for me is the leading indicator. Divergences, bullish or bearish, they give you a good heads up in the moment, but you know, they're not. Obviously, nothing is 100% accurate.
Yeah, of course. And in terms of reward, what do you look for? Do you have a specific reward to risk that you want to get?
Yeah, minimum of 2 to 1. If
Okay.
it's not 2 to 1, then I'm not really interested. Simple as that, really.
And I'm going to guess that you look at structure to define that, right?
Yeah, absolutely. Like I've said before, not necessarily in this interview, but in a previous conversation, I think that when you exit a winning trade, it's the worst thing you can do, because if you're riding a wave, you might as well continue that wave until the end. What a lot of people do when they're trading is they set their target, which is essentially their exit from a trade. And if the trade does go in your favor and you exit it early, when it hits, say, take profit 1 or TP1, then you really have kind of decimated a trade with good profit potential, because typically winning trades, if they do win, go on to the stars and back.
Yeah, I think that's what I found people get really early often, and that's the problem. You told me you had 75 students. So what are some of the mistakes you see people make often in trading?
Well, the number one mistake people make in trading is expectations management, I think. And that's not really a mistake. That's more of a mindset before trading. I mean, a lot of people fail to break the link between time spent in front of the screen and the potential return the market can give you. I think expectations management is absolutely key. And for people to run trading like a business, which can make consistent percentage gain over months and years, very much like the tortoise beating the hare ultimately. If people can see it more in that way rather than a get-rich-quick scheme, then more power to them. Risk management is also a huge one. We never risk more than 2%. We always say to people, our clients, don't risk more than 1%, risk 2% when you're consistently profitable, but not until then.
And I guess one of the big things people have to do is to scale in, right? Not go all in at the first time.
Yeah, absolutely. I mean, adding on to the position, for example. Like, for example, if we're trading a supply and demand, let's say, for example, our recent pound Swiss short trade, a number of our clients had a sell order, the multi-year high, which we saw in December. And then we had an inverse hammer, which some of our clients got in at. It's a second trade for people who are already in the market. And for the third position, risking 2%, whilst the other previous two trades were brought to break even, was the lower high, which was seen as the bearish pin bar reversal. I think it was the 1st of December where we saw that lower high, which marked pretty much the completion point to what was a big reversal. And that's what we did. We didn't scale in. We added to the position because we find that a lot more lucrative, where you move 2% trade risking 2% to break even. Then we get another entry point risking 2%, rather than spreading up that 2% into free fragments, free portions, and getting in that way. If that makes sense.
Yeah, that's definitely interesting for sure. In terms of when people are starting out to, let's say people have a job and they want to start to trade on a higher time frame. What would be a step that you have to look for to start to trade?
What do they have to look for in the higher time frame?
Yeah. So should they start just finding a strategy and trading it, or should they go with something different?
I think that's the best thing they can possibly do. Yes. I would start with a trend-based strategy, trading the weekly time frame. So you can be an end of week trader and really have an easy time of it. I'd always, trade with the trend, with a confirmation of, say, free moving averages representing the short, medium and long-term traders, buying the dips in an upward trend and selling rallies in a downward trend. You can do a lot worse than that, quite frankly. And I'll say trade reversals. Do that when you're a little bit more experienced. You don't have to do that at all, by the way, to make good money from markets. You can just skip that completely. I just do it because I know it's very lucrative when it works. But it depends on your psychology. If you're happy with having an 80% failure rate for reversals, and say, for example, you take 10 trades, you sustain 8 losses trading reversals, would you have the testicular fortitude, if you forgive my expression, to actually place the next trade after 8 losses? A lot of people probably wouldn't. They'd far rather trade a trend-based play with lower profit potential, but with higher probability. There's always that trade-off.
And how do you get to overcome the boredom that's associated with higher time frame? Do people get ever bored sometimes and they kind of jump to a time frame?
Yeah, absolutely. I mean, people who are a little bit more available to trade, I get clients like that who are so available to trade, they just send me love letters all day long, and it gets a little bit tedious. So I just simply say, look, if you're that bored, if you're going to trade the smaller time frames, if you've got the time available, then certainly do exactly the same as you would on the daily, based on the strategies which you teach. On, say, the 4 hourly, it's a relatively stable time frame, and it's relatively fluid in terms of the movements. You're not as immune to news and intraday spikes as you are the daily and the weekly, obviously, but you get more opportunities than you do the daily and the weekly, which of course gives you a higher tally of trades, lower profit potential, of course, but a higher frequency of trades to trades, both winning trade outcomes and losing trade outcomes.
But I think people have to realize also that it's not about always getting something instantaneously. It's not always about getting something right now. So sometimes they have to wait, of course, they kind of have to develop patience at some point. No,
indeed, and patience and discipline is one of the most two key elements that make any successful trader. That's the hardest thing for a lot of people to overcome in the market: patience and discipline, and not having it. But the market will definitely teach you to become patient and disciplined if you're not already.
How does that work? How do you learn that?
Well, if you have a set of rules, like rules for entry of any strategy, which hopefully people listening will, and you stick to them, you'll accept that, okay, there's no strategy which wins all the time. Some strategies win some of the time, some most of the time, but there's no strategy that wins the whole time. And losing the battle, i.e. losing the trade, is part and parcel of trading. It's like a necessary business expense to ultimately winning the war and having a positive overall equity curve over the course of months and the years you'll be trading for. But if you do fudge the rules for entry and you do have a losing outcome, then you need a punishment and reward system.
Tell us about the reward and punishment system a little bit, because that's good. I think that made a big difference for me, so I want to hear how you do it.
No, sure. I mean, punishment and reward system, it's a personal thing. I mean, I would always say, if you are sticking to the rules and you're having a good outcome or even a break-even outcome, then reward yourself with something that is unrelated to trading, something that you might not otherwise do. You treat yourself like an evening out somewhere, like a nice restaurant, or go clubbing with your friends to a club you wouldn't otherwise go to, a nice upscale place, or, just use your imagination. But if it's a punishment, then it's the reverse of that. Do something which you ultimately really don't want to do. Like I'd say, if you're English, British, read Gordon Brown's autobiography. It's the most boring read on the planet, and is written by the most boring man on the planet. I guess if you're based in the States, the equivalent could be George Bush's autobiography. I imagine that's pretty boring.
Yeah, okay. Or it could be just doing some backtesting or doing something that can help you trading, I guess.
Well, you could do that.
Yeah,
that's true.
Interesting. Yeah, it's interesting. But I guess like the point here is not to focus on the outcome, but really on the process.
Absolutely. Right. You should not have an emotional attachment to the outcome of the trade. Just like a little bit like dating, for example. I mean, generally people, from my own experiences being a single individual, in the past when I was certainly dating a lot, through not having an emotional attachment to the outcome of the date or the situation, or whether it was a sales call. I used to work in sales when I was younger. As soon as I removed the emotional attachment to the outcome of the situation, whatever it was, the better my results were. And the less exhausting the process became, the easier it was to facilitate the process.
Mm-hmm. It's interesting.
These kind of like, this kind of, dare I say, phenomena, not having an emotional attachment to the outcome of the trade, is something which you can easily apply to other areas on life, whether it's sales, dating. It's very pliable in that respect.
Mm-hmm. Yeah, totally. So one of the articles that I saw on your website just before going in the interview is about visualization. Now, I know you have your opinion on this, but could you tell us how you think it's beneficial or not beneficial in trading?
No, sure. I mean, I think visualization, I don't know if you've seen the law of attraction.
Yeah.
I think it's always good to have your eye on the bigger picture. Okay. Obviously, don't set yourself monthly or weekly targets in trading, but always have the vision. The vision is to make money or percentage gain. Okay. And to do that, just always remember that you have to essentially trade a strategy which is profitable and stick to the rules. And to do that, if you're successful in doing that, then there's no reason why you can't obtain your long-term goals eventually. Everyone has their different time scale. Some people who I've trained, absolutely smash it and make it in several months. Some take several years. But remember that trading is, a lot of people seem to think that it's, to train to be a doctor, you need to get a medical school, and it's a long-term process. If you want to learn how to drive, you need to learn how to drive a car. But for some reason, when it comes to financial markets trading, people are gung-ho in the market and they just simply are trigger happy. And unfortunately, the market doesn't reward people like that. You need to be trained and have a commitment to your learning and invest in yourself. Preferably not with losses in your trading account, preferably actually being trained by people who know what they're doing.
Uh-huh. We want to keep the podcast actionable. So in your opinion, what would be some step people can take following this interview to really like improve themselves?
Well, I would say if you're not profitable already, then take some time out to ask why. What are you doing wrong? Assess what time you have to trade. For example, what kind of style would fit your personality? When I talk to people about end of day set and forget lazy trading, a lot of people kind of have that light bulb moment because they realize they want to come to the market to make money and nothing else really. It's very seldom that you come across someone who has an intellectual fascination in the market and that's it. But for some reason, people get blindsided and lost in that big black hole vortex. I call it intellectual masturbation, actually. And unfortunately, too many people fall into that trap. I would say find a trading strategy which suits your personality and your availability to trade. The less intrusive your trading is, the better on your family life, your professional career as well. And that is what steps I'd advise you to take next. Devise whether you're a trend trader or a reversal trader. I would recommend the former, quite frankly, unless you're into self-harm. The emotional trauma of having 8 losses before getting 2 big wins. But yeah, I mean, I would say trading is a good space, a good activity for some introspection.
So how can people find you exactly?
Okay, well, to find us, just simply go to www.thelazytrader.com and have a poke around. Download your free ebook and video pack, 5 rapid ways to become highly profitable in Forex trading. And you'll be able to get your hands on some video course as well, all for free. And just read it and see what you think.
That's great. And what kind of goal do you have for the future?
My personal goal? Well, good question. Is to continue doing what I'm already doing. Doing what I want, when I want, with who I want. And just being completely free from, be my own man and not have to work for anyone ever again. Ever.
And what is your main motivation? Is it the fact of not having to work for anyone?
Yeah, absolutely. It's being financially free as well as free of constraints. That for me is a big incentive. I mean, I've always been quite maverick. Ever since from my school days, I've never really conformed. I guess you could say I'm a bit of an oddball, but I'm happy with that.
Mm-hmm. That's great. So I just want to remind the listeners that all the show notes are going to be in desiretotrade.com. So if people want to find out the link we talked about, there's quite a few things, and you have to get trading in the zone. So if people want to find the link for that, just check out desiretotrade.com. They're going to see everything, and you can go from there. And Robert, I have one last question for you, which is sometimes tricky, sometimes easy. And it is, if you could give only one piece of advice for traders, what would that one sentence of advice be?
Oh, that's a very good question. The one thing I would say to do, the one bit of advice is a lesson in patience and discipline, and just to have no fear in the market when you're trading. You can eliminate your fear by simply sticking to the rules of your strategy, safe in the knowledge that if you've got a good edge, then quite frankly, there's no reason why you can't make money long term.
So Rob Colville, thanks for being on the podcast. It's been a pleasure to have you here. And for all listeners, I'll see you in the next episode. So overall, I think it's up to you to decide whether you want to trade intraday or trade higher time frame. Rob Colville is really great at trading higher time frame, and he knows what he's doing. The best part of it, I would say, for having experiencing myself, is the lifestyle you have. You don't have to spend much time trading. You can just spend time reviewing your chart and then executing your trade when it's time to do it. So if you want to jump into higher time frame trading, use the advice Rob mentioned about how to start. It's about finding a strategy that works for you and then trying it in a higher time frame. You can also backtest as well, but figure out whether it works for you or not. I think Rob had great advice about how to prepare yourself to trade in the long term. So it was my pleasure to bring you this interview. And as always, if you like the podcast, leave a review on iTunes. That will help a lot. Not only me, but to spread the word about the podcast, to make sure that other people are aware and other people benefit from these interviews with traders. And on that note, reach out to me if you have any question. Check out the Facebook group at desiretotrade.com/group. And I'll see you in the next episode of the Desire Trade Podcast. Ciao.